lectures. This is video number 3 of 4 videos, and we'll be focusing on audit sampling as governed by ISA 530. Our objectives in this session are to continue with the discussion that we're having in part 2 of the lecture, which is to continue discussing audit sampling applied to test of controls. Attribute sampling applied to test of controls. Okay, so just to recap, in lecture 1 we defined what sampling was and an introduction to audit sampling, why there is need for sampling. We also looked at the definitions which we are currently using at the moment, and we use them in the part 2 of the lecture with regards to audit sampling. And in part 2 of the lecture, we also then went on to see that we need to plan, we need to perform, and we need to evaluate and document each of the stages in coming up with a proper audit sample. So in part 2, you'll remember that we looked mainly at the planning stage. And so in part 3, we'll be looking at the performance and evaluation of attribute sampling with regards to test of controls. So in part 2, you'll remember that we looked at the plan, but when we're looking at the plan, we defined, as part of planning, we looked at how we define the objectives of the sample, and defining the population characteristics that we require of the sample, and thirdly, we also looked at how to determine the sample size. So moving on, now that we're done with the planning phase of attribute sampling with regards to test of controls, in this session we'll be looking at performance and evaluation, as well as a small example of piecing up the things together, piecing up the table, the puzzle together, to see how exactly you'd perform it, or you'd carry it out in the workplace or in the exam if it comes. So now we're looking at performance and evaluation, as I said. And as part of the first stages of performance and evaluation, you need to select the sample items. Remember, as I said, we looked at how to determine the sample size as the last thing in video number 2. So video number 3 now, we're starting off from selecting the sample size, the sample items. So you can select in 2 ways generally. We also looked at a little bit of this in the beginning of part 2. But now we're going to see that we look at random selection and systematic selection. So random sampling is when every item within the population has the same probability of being selected as a sampling unit. So you've watched, let's say, Lotto, for example, where you've got so many numbers, but each number has an equal chance of selection. So that is random sampling, when all the sampling items have an equal chance of selection. That is your random sampling. And then you've also got systematic selection. So as part of systematic selection, what the auditor does is they set a sampling interval, and that's maybe by dividing the population by, let's say, the sample size. And so you start at, let's say, number 5, which is your first interval. And after, say, starting with number 5, which is your first interval, you then say every maybe 4th number is part of, goes into the sample. So you have maybe your number 1 to number 50, or number 1 to 1,000. And then you have your starting interval, and then systematically after that, you select every maybe 100th item or every 80th item after that. That is systematic selection. When you've then selected using either random sampling or systematic sampling, then so random selection or systematic selection, you then go on to performance. And in terms of performance now, this is where you're actually carrying out. So for example, let's assume that a sales invoice should not be prepared unless if there's a related shipping document for that sales invoice. If the shipping document is present, there's evidence that the control is working. But if the shipping document is not there, then there's a deviation which is actually existing. So this is how you'll be performing your procedures. And this is when you're setting out in the first place, what is your objective and what is your deviation. So now that you've said that, you now want to perform the actual procedures. So you find that in your selections, now maybe whether you're using random selection or you're using systematic selection, in your selections you'll find that certain of the items that you're going to pick might be voided documents. So a voided document is perhaps maybe a cancelled document, and so it could be an invoice that you're looking for. And you find that each and every, the one that you then select maybe randomly or systematically, the one that is picked is voided. Maybe it's a cancelled one. Or it could be that it's unused. So you go and pick, but you realize that the particular one that you picked is actually unused or it's inapplicable to the test that you want to carry out. Now this is fine. You can go and replace it with another item only if there is no suspicion and the auditor finds nothing unusual about it, about the item being voided or the item being unused. But if the auditor then finds something unusual about it, then they need to carry out more tests, but they can actually define it as a deviation. Once, if the auditor then says there's nothing unusual and they're saying it's okay, they've replaced the voided documents or the unused documents, they've replaced them, then, but sometimes you can then find an inability to examine a sample item. So if the auditor, if you as the auditor are unable to determine or to examine a document or to use an alternative procedure to test the control, then the sample item is a deviation for the purposes of evaluating the sample results. It means that you need to then document it as a deviation. Sometimes you might also need to stop the test before completion. This is normally where you found a large number of deviations or you detected early in the test that there's a large number of deviations from the control. Then it means that you need to stop testing. Why? Because it then becomes apparent that, or as soon as you need to stop testing, as soon as it becomes apparent or clear that the results of the test will not support the planned assessed level of control risk. Remember, when you're doing your risk assessment, you planned or you expected a certain level of control risk. But as you're testing these controls now, you then might find that there are more deviations than you expected. Then it means that the level that you had set for control risks is no longer appropriate. So maybe you need to then reconsider, or maybe you need to abandon the test all in all. So you have to stop before actually completing, because the more deviations you find, you cannot continue, because obviously it means that at planning phase, maybe there were things that you did not anticipate or you did not consider when you're looking at your risk assessment. So the next thing now is to calculate the sample deviation and the upper deviation rates. And finally, you then draw your conclusion. So you find that after completing the auditing procedures that we just talked about, where maybe you found voided and you found unused documents and you carried out your procedures, the auditor will then summarize the deviations because you're writing them down as you are seeing your deviations. So for example, you find you could have a population, a sample size of 50. And in the sample size of 50, in carrying out your test, you found maybe 2 deviations. So you then say your deviations divided by your sample size, which gives you your deviations, your percentage of deviations. So in this case, if you had 2 deviations in a sample size of 50, you divide 2 by 50, you find that there's a 4% deviation rate. So that is the deviation rate, the sample deviation. Then the upper deviation rate now is the sum, so you add together the sample deviation, which in this case, given our example, would be 4, and an appropriate allowance for sampling risk. Remember, we defined sampling risk earlier in our other sessions. So you add that up. What would have been your sampling risk? And remember, this is why also this is why statistical sampling is good, because you then quantify, you can quantify your sampling risk if you use the statistical sampling as we discussed earlier. So you then take the quantified statistical sampling or the sampling risk that you'd have quantified plus the deviation, the sample deviation, and you add the two together. They then give you your upper deviation rate. Then you will need to compare your upper deviation rate and your tolerable deviation rate. If the upper deviation rate is higher than the tolerable deviation rate, then it means that the auditor cannot use the sample, or they cannot rely on those controls. So let's look at a small example. Okay. So as you're seeing on your slide, let's read. The auditor has decided to test a control at Collabro Wireless Services. The test is to determine the sales and service contracts. The test, is to determine the sales and service contracts are properly authorized for credit approval. A deviation in this test is defined as the failure for the credit department personnel to follow proper credit approval procedures for new and existing customers. So there's some information relating to this test, which the auditor will then have come up with. So the auditor then came up with a desired confidence level, which is based on the level of assurance that the auditor wanted to give. And in this case, the auditor determined this to be 95%. And then they determined their tolerable deviation rate to be 6%. So then they said that they will not, in other words, the auditor is saying they are not going to accept the maximum level of deviations that they're going to accept is 6%, as much as their desired confidence level is 95%. And the auditor, maybe based on their experience, was expecting a population deviation rate of 1%. And they came up with a sample size of 98. Let's see how maybe they would have come up with a sample size. So you can also use, let's say, Excel. Excel can be used in coming up with this. So you have your table on Excel and you can use your tools in Excel. And as you can see on our table, you're seeing that the expected population deviation was at 1%. And if you go straight with that, there's the tolerable deviation rate. And remember, the tolerable deviation rate was 6%. Therefore, at 6% and 1%, your population is 78. That is how a table would have been used to then come up, an Excel table would have been used to come up with the population size. And moving on with our example. So the auditor then examines each selected contract from the population. So as much as they had the sample, then they probably used different, maybe they used random selection, or they used they used systematic selection to then test certain invoices. And what they then did, certain contracts, for credit approval. Then in their tests, they came up with deviations of, say, 2. And the sample size, remember, we said was 78. So for the sample deviation rate, you divide the number of deviations by the sample size, so 2 divided by 78, and they came up with what? 2.6%. A computed upper deviation rate. Now, incorporating the sampling risk then gave the auditor 8.2%. But the tolerable deviation that the auditor had set in our example at the beginning was 6%. But let's see how we get the computed upper deviation rate. Again, you can use your sampling table. So when you've got your Excel, so normally this could be a software that can be used, or you can use your Excel and trying to come up with, firstly, what's your sample size? If you go straight down, your sample size was 76 and your deviations were 2. So you find that when your deviations are 2 and your sample size was 78, you then need to come to a point whereby you, where they intersect, where the 2 intersect, is the rate that is used as the deviation rate. So, and it was 8.2. But this is calculated maybe by an Excel spreadsheet, and you'll have input certain variables for it to come up with this. So what is it that we will see? What will be the auditor's decision? So because the tolerable deviation rate was 6%, but the computed upper deviation rate was 8.2%. Because now the computed deviation rate is higher than the tolerable deviation rate, you'll find that the auditor's decision will be not to rely on the test of controls. But if it was the opposite now, saying that the tolerable deviation rate was, let's say, lower than the computed upper deviation rate, then the auditor would then conclude to rely on the controls. Okay, so that is it in this session. Let's watch out for the last part of the video sessions, which on sampling, which is part 4. Thank you very much.